Well, hello again and welcome to Virginia This Morning. I'm Bill Bevins. When the tax reform law passed last year, the opportunity for tax breaks for charitable contributions disappeared for many. But you can still give to the charity of your choice and get a tax benefit. Local money expert J.B. Bryant is here to tell us how that all works. I mean, they disappeared, and now you're going to make them magically reappear for us, aren't you?
And it really didn't disappear. You still can, if you itemize on your tax return, Bill, you can still get the benefit of your contributions to a charity. But because the standard deduction has doubled, many people will not itemize. And the majority of taxpayers do not itemize now. But now, effective in 2018, the standard deductions have doubled. So you'll find that there's even less of a need for a person to itemize because they're not going to be able to exceed the standard deductions that are now even higher.
So I'm guessing charities really started to freak out at one point, and then things have settled down a little bit, and that's why you're here, is to kind of bring things back into focus for us, because there is a way to do it. One of the ways you want to do this is pooling all your contributions. Explain how we do that.
And that's an idea of, you have to do tax planning for this. So this is why it's important to watch the Virginia This Morning show, because this can work for you.
Okay.
The goal is to have enough itemized deductions that will exceed the standard deduction. So if you can pool your charity together, your charity, say you give to your charities every 3 years and you save them up, and in the third year, you're able to put that contribution on your tax return and take advantage of it in your itemized deductions, because now it's pushed you over. So you now have more itemized deductions theoretically than you have that exceed the standard deduction, even the new high ones. And by pooling them together, instead of just having these little ones that don't help you be able to itemize, you pool them together and use them all like every third year or every fourth year. But you have to do planning in order to do that. You have
that was going to be my question. You mean we've actually got to put thought and planning into it?
That's right. That's right.
Darn.
To get the tax benefit.
All right.
Yes.
So, all right. Well, not my strong point, but we'll work on it. All right. Now, you've got a suggestion that seniors with IRAs have some opportunities as well, too.
Thank you for pointing that out, because seniors have an advantage. It started in December of 2015, and it did not go away under this tax reform. Seniors, meaning people over 70 and a half. They can take out what are called qualified charitable deductions from their IRAs. Now, let me repeat. 70 and a half seniors, because some people think that 50 years old is a senior. No, out of your IRA, you can take, because they're beginning to, they're forced at this point at 70 and a half to take out what's called their required minimum distribution. Well, many people don't want that required minimum distribution because it increases their taxable income.
Right.
So what they're able to do is take it as a qualified charitable deduction. The money goes directly to their charity, and they're able to not count that withdrawal, and it counts as a required minimum distribution. So they've satisfied their tax requirement, and it's not counted as income. So we want to encourage.
And you'll be a hero with your favorite charity.
You'll be a hero.
Yeah.
Hero to yourself.
Hero to yourself.
That's right.
Hero to the charity.
That's right.
Uncle Sam, you mind your own business. Okay.
And I've mentioned that to many people because I've received emails about not wanting to do, what do? I have to take this required minimum distribution. And in previous years, their tax preparer have told, they've emailed me back and said, well, my tax preparer said it really don't have to do it that way. And it's mostly because they're itemizing. But now, with especially for seniors, they have an even higher standard deduction. So now we have to make sure you go back and talk to your tax preparer again and say, would it be better for me to put these charitable donations under a qualified charitable distribution?
I got about a minute left, so I got to get to these other things. Encourage charities to look to businesses. Well, how's that work?
Very good, because the tax bracket for businesses has been lowered, and businesses are now a great avenue for you to say, look, you're saving money on taxes. You know how you see in the news now, their businesses are giving out bonuses. Well, that's also money that could go to your charity. But talk to the businesses, especially their mid-sized businesses are getting great tax benefits from this lower tax taxation on businesses. So say, can you put some of that money that you're saving on taxes towards helping the community?
So those corporate citizens, as we call
That's
them
right.
from time to time, can be even a better citizen.
That's right.
Okay,
Look
good.
to
That's
your
great.
businesses.
All right. And finally, investigate donor-advised funds. What's that mean?
And a donor-advised fund, so many people don't know about it, but it's actually a way for you to set up your own personal charitable savings account. So you get to count the money that you put into the donor-advised fund in that year, but you can pool them together, and so you count the deduction immediately, but you don't have to distribute it to your charity until later. So the donor-advised fund is actually a charity that is pooling together your money for you so that you can distribute it to your charities at your choosing. Generally, most of the time is for when you have a big asset that's had huge capital gain that you want to avoid.
Not a problem I've had in the past. But it does allow me to get one of my life goals.
Talk to your tax advisor.
I've always wanted to be a philanthropist. All right, so, thanks, JB.
It's happening.
JB offers free money seminars every Wednesday and Sunday evenings. Pre-registration is required, and we'll put a link for more information on our website, WTVR.com/VTM. And now let's go over to Jessica.